Welcome back, and look at shares of Nvidia up another 3% today. That probably puts them around 20% year-to-date gain territory after their big announcement this week that they are lining up $500 billion in funding commitments to help drive the adoption of compute as an asset class. Does our next guest think this is a good idea? Let's bring in Bob Greifeld, the former Nasdaq CEO, who is the co-founder of Cornerstone Financial Tech Management and a CNBC contributor. Bob, it's great to see you again. What are your thoughts?
Well, I have a few. So one, when you think about it, the stock should go up because in a certain way, they've lessened their risk, right? So they started with a situation where they're providing product to the customer's paying for it. Then they're in the business of vendor financing. They have widened the circle where there's more people involved with this financing. And what I like about it is the third parties involved probably will do a market rate setting in terms of what this this asset should price at. Should it be 11% interest rate, 12, things like that. There are things about it I don't like, but certainly I think from the company's point of view, it's a good thing.
What are the things you don't like about it?
So one, there's more people in the circle and there's points of leverage in every part of the circle. So we don't really know how much leverage is in the system as we go through that. But I also think when we see the risk, I haven't heard people talking about this. We think about LLMs, and they're a phenomenal advance, right, for society. But when they came out with the LLMs, it's obvious they were trying to be effective first and not efficient. So I would think that the compute power required to do a given task in an LLM is going to go down 100-fold. And what always stays with me, when I was in grad school taking computer programming class, the professor had us write a program. And we first wrote it, and it really took a supercomputer to run it. And he said, your job, if you want to get an A, you have to make this program run on a TRS-80, a Trash 80, the Radio Shack computer back in the day. And we weren't that talented, but most of us got the ability to take it from a supercomputer use of resources down to a microcomputer. So I think LLMs over the next decade might have a 100-fold decrease in the amount of compute power they require to get a task. That's hard to put in a model when you're lending on equipment over that period of time.
And speaking of the equipment, and some have raised concerns about how valuable can it continue to be. Here's what the CEO of CoreWeave said about that very question on our air earlier.
One of the debates that has followed this industry has been on older generations of GPUs. And what we have, I hope, put to bed here is that those older generations of GPUs are going to have a longer useful life than anyone anticipated. They are going to contract for a longer term, and they are going to contract at a higher price. And we already are seeing that flow through our platform.
And that's something, Bob, that Srini Pajuri of RBC told us yesterday, that these A100s NVIDIA introduced in 2020 are still being used today. So does that help to allay some of those concerns you talked about?
It does. I'm in violent agreement with that. I believe the useful life of these computers will be longer than people were talking about, just a couple months ago. But the two other factors I want to highlight, one is obviously the cost of doing that, running that software, will go down dramatically over the next decade. I'm making a prediction, a 100-fold decrease. The second thing is LLMs today are strictly about the data center. But each of us have one of these phones in our hand. There's 7.6 billion of them out there. That has a lot of compute power. So over the next decade, you're going to see edge computing be a real play in the AI race. So certainly in the next number of years, we'll see phones come out that are AI native that can do a lot of the LLMs or SLMs, or whatever you want to call it at that point in time, on the device itself. So when I think about lending to data center based, right, today it's only game in town. So you have two fundamental drivers over the next decade. The software gets more efficient, reducing dramatically the use of hardware per given operation. And second, the devices in your hand will become an effective compute. There's a lot of computing power in these devices today, and that's going to be nothing but increase in the time to come.